you can't stomach another loss like that again. And I think the only thing that helps with that is just sizing back down for a long time and proving to yourself that you do have an edge and you do have what it takes. And eventually you can scale back up.
Hello everybody, this is Anthony for Investors Underground. Today, I have the opportunity to speak with David Hanlin. David is an entrepreneur and trader with a laser-like focus on success. He managed to transform his life from negative net worth to being a millionaire by the age of 24, and he documented part of that process online. You could follow him on social media at The Laptop Legend. Hello David, thank you for being here and taking the time to speak with me today.
Hello, my pleasure.
David, for those who might not know your story or anything about you, can you maybe give us some background on your history with entrepreneurship and how you first got interested in trading?
I first got interested in stocks back in 2011 when I was 14. And I bought my first stock back then, which was PepsiCo. But long story short, I didn't get into trading until 2016 when I found some Tim Sykes videos. I think a lot of people also got into day trading because of him. And back then, I really did not have enough capital to start with. I don't know that I had the emotional maturity. And I just basically chased high of day breakouts on, low float NASDAQs. And most of the time, that did not work. So eventually, I guess I gave up after about maybe 2 years. I gave up in 2018. And at that point, I was on an abroad in Madrid, in Spain. And I had a friend who was having success with e-commerce. And so he helped me start an e-commerce business. And with his guidance and mentorship, I was able to have fairly decent success in that. I think I started trading with about $3,000 originally in 2016. And after I had success with e-commerce, I was able to come back to it and have a little bit more money right when the markets were getting hot at the end of 2020. So that's when I came back to it in terms of that. And the reason I decided to be an entrepreneur, it wasn't something that I ever thought I wanted to do as a kid. I always was, I guess, kind of scared of the unknown, of not having a job where you get like consistent income. That kind of scared me. But despite going to a pretty good college, I went to Wash U in St. Louis, Olin Business School. I got a finance degree, but I applied to over 150 jobs. I had dozens of interviews. I have a video talking about this, and literally nobody hired me. The vast majority didn't even respond. And that was really disheartening. And that kind of pushed me towards entrepreneurship. So it wasn't something I ever dreamed of being as a kid. I thought I was going to work for like Bose or something, be an electrical engineer. But when the reality hit that I couldn't get a job, it was kind of forced onto me. And I think it just matched really well with my personality of being able to self-motivate, I guess. So because of all those things, with my friend helping with entrepreneurship, with e-commerce, coming back in to trading right as the markets were getting hot, towards the end of 2020, 2021, when it was the hottest market we've had probably since the tech bubble, it was just the perfect storm for me to be able to be successful as a trader.
Mm-hmm. That's incredible. And one of the things that strikes me about you is just you're relentless about success. And you knew, it seems very apparent in your videos, that you really want to succeed at whatever it is that you do. Is that something that has been with you your whole life? Have you always had that sort of driven mindset?
Yeah, I think it's just something it's truly wired into my personality. Even when I was a kid and I didn't know exactly what I wanted to be or how I wanted to achieve that success, I knew that I was going to stop at nothing until I got it. So I think that really has had a huge impact on my success as a trader.
Did you approach trading the same sort of way that you approached your entrepreneurship? Really focused on treating it like a business from day one, or did that change over the years?
I would say I treated it fairly similarly, but I don't know that I would say I treated it like a business in that regard. In terms of how most people define trading like a business, I would say that the reason that or the way that I treated entrepreneurship and trading similarly is, for me, entrepreneurship is something that I never gave up on, and I was always testing new things. So when you are in e-commerce, at least with what I did, you're always testing new products, you're running new ads, trying to figure out the perfect combination that works. And so when I started trading, it was a very similar thing where I'm trying out a bunch of different strategies, different tickers, different markets, seeing what works for me, and just that relentless drive to, okay, I failed, doesn't matter, on to the next one, failed, on to the next one, failed, on to the next one. Oh, I found one that works. So I would say that's, how it's similar.
How did you eventually land on the trading niche and style and strategy that you ultimately found success with?
I'm not really even sure if it was just chance or whatever, but for whatever reason, I had like a FinTwit account from back in the day when I was trading back in 2016. And so when I came back in 2020, somehow I ended up following this dude called George Sharp. And if you traded OTCs at all in 2021, you know who this guy is. But basically, he's this guy who exposes fraud on OTCs. And then he also is the custodian of some OTC tickers. And he was responsible for the merger between the ticker TSNP and the company Humble. And so that was just randomly the biggest runner I think that the stock market has ever had, at least with liquidity. It ran like 1.5% in like 2 months or 3 months, something like that. And so for whatever reason, when I came back to trading, I just happened to be following this guy who just happened to make the biggest merger that ran the most in the history of the stock market happen. So it was just complete chance. But because of that, because I was following him and I started seeing that stock run, I was just naturally drawn to these OTC stocks because that's what I saw moving and that's what was working for me at the time. Listening to other interviews with people you've had on here, it's become obvious to me that there were a lot of listed plays in 2020 that I probably could have made money on as well if I knew what I was doing. But I just happened to be following this guy, and that's really what got me into OTCs at first.
Mm-hmm. That's incredible. Just great timing at that moment.
Yeah.
And one of the things that's really interesting to me is that you've spoken explicitly about not trading the larger names, the larger market caps or listed names as well. And you have said that you're completely fine with that. You know that you don't trade them well, but you found what works for you with OTCs and sub penny stocks. So can you talk about the importance of finding what works for you and really sticking with it and honing that success?
Absolutely. I think everyone has a different personality just in general in terms of what their risk tolerance is and just the way that they feel comfortable trading. And for me, the way that I am most comfortable trading is if I have an entry on a stock, it's very precise and I'm never negative on my position and I can add to a winner. And that's something that you can get on OTCs because with just the way that the tape works and the level 2, I wouldn't say easy, but it's a lot easier to have precise entries where you're never negative on your position versus if you're trading something like Apple or Tesla, it's pretty much impossible to never be negative on your position unless you're Nate and you just time it perfectly every time. But what my point is, for me, it's impossible to trade something like a large cap because the way I like to trade is if I get in and it goes against me, I pretty much just get out of the trade. So if I try to trade large caps like that, I just get chopped up. Or, I get in and it goes my way a little bit and I add to a winner and now I have a worse average and it comes back and I cut as soon as I'm negative. And it just, for whatever reason, it doesn't mesh very well with my personality. And there's certain setups that do mesh really well with my personality. And I think the important thing is just finding what you like to trade, what you're comfortable trading with, where you really excel and putting your time and energy into that and avoiding the other setups. Large caps, I would love to learn how to trade that at some point. And I think swinging large caps may be a better fit for me because I can have a little wider risk and smaller size and maybe get a bigger move. But just in general, I've really avoided that very well since I realized that. And it's I would say had a significant impact on my P&L because if I tried to trade that every day, I would have paper cut after paper cut after paper cut. And it might not seem like a big deal on one day, all right, I lost $500, whatever. But if you actually add that up, how many times I try to trade a large cap and lose $500 over the course of a year, it really adds up. So it's something I want to avoid.
Can you talk a little bit about the type of stocks that you trade? What gets you interested in possibly trading a stock? And could you talk about some of the maybe inherent risks or differences between OTC stocks and some of the listed names?
Sure. I like trading scams. That's where I feel most at home, because I feel like I understand the agenda for the most part really well, and that allows me to have more conviction when a trade is going my way, for me to have patience to hold it for a bigger move, as well as add to a winner and pyramid into that trade. So I actually don't only trade OTCs. There's certain OTCs that I like, but what I look for is I need volume, basically liquidity, and I need range. And those are kind of the two main things. So nowadays, that's pretty rare in the OTC market to get a combination of volume and range. If you get some of the sub penny stocks, they do trade hundreds of millions of shares sometimes. But if you think about it in terms of dollar volume, it's not actually that much. And I actually am not a fan of sub penny stocks, like below 1 penny, just because the way that I like to trade, again, where I cut stuff as soon as it goes against me, it doesn't really work when you get stuff that cheap, because every tick becomes a larger and larger percentage. If you have something that's what is it, 1 penny? I guess if it down ticks one, it's 1%. But if you get something that's 0.001 and it down ticks to 0.0009, that's what is that, a 9% move? So if I, trying to get out of that, I end up losing like 20% on the spread. So for that reason, that doesn't really work for me. But I like stuff that has, again, volume and range. And you can get that on OTC stocks, or you can get that on listed stocks. But when I know for sure that it's a complete scam, it's easier for me to have conviction if I'm longing it to hold for a bigger move when something's just floating up for no reason, because I know promoters are probably moving this up to eventually dump shares. And then on the flip side, once they start selling and I get short, it's easier for me to hold because I know it's eventually going to go pretty much back to zero. So that's why I really like those setups, scams in general. I also trade just normal runners, stuff like NKLA on Friday. When the daily chart really aligns, you get great liquidity. Again, you get great range, a perfect gap up, and then the typical first red day setup. I trade stuff like that. I'll trade breakouts. I mean, there's a lot of stuff that I trade, but really where my preference is trading complete scams.
And what are some of the red flags or indicators that tip you off that a stock or a promotion might be a total scam?
I think it depends on whether we're talking OTC or listed. But there's certain things. So like on OTC stocks, there's certain ways that they move when they're moving naturally. And then there's ways that they move when they're being promoted and highly manipulated. Like a classic OTC pump, you can see like every single day, it's just like a stair step, and that's just not natural price action. Other things that you can look for are like who's connected to the stock. So on OTC, you can go and look into the filings and see who owns shares of the company. And there's times where like I've seen previous complete scams, and then I go see some random volume on a random OTC, and I go dive into the filings, and I see that, the CEO of that previous scam company just happens to own 10 million shares of this company, and now it's randomly moving. When I see something like that, I'm like, okay, there's probably an agenda here. And then on listed stocks, you can go and dive into similar things in terms of who has shares, what price they have them from. You can look into who the underwriter is and see if there's any connections there based on previous scams. So all these things can help align and just give you that conviction. And also when the price action adds up, when it does stuff that's unnatural, when it has 15 green days in a row, that's not something that would naturally happen unless someone is bringing the price back every time it dips red. Mm-hmm. So all those things.
Thank you. That's really helpful. And what sort of percentage would you say you're looking at the fundamentals or reading the filings versus the technical side of a chart?
I would say technicals always come first, because it doesn't matter how convicted you are on a setup. If it's not doing what you want, you're going to end up losing money on it. I think fundamentals are one of those things that allow you to have the conviction if it is working, but it's hard to give a percentage because ultimately the only thing that truly matters is the technicals. So yeah, I'm not sure exactly how to give you a perfect answer on that question, but hopefully that makes sense.
Yeah, absolutely. I don't think there really is a perfect answer to it, but I've noticed that traders, uh, very similarly, might answer how you did, which is, the price action is ultimately what matters and what pays, versus, there might help to have a little bit of understanding how to read the filings and being able to sort of marry those in some certain combination.
Exactly. Yeah. And I think there's also a danger as a short seller of becoming too attached to the fundamentals. And this is something that I learned last year. I just actually tweeted about this, but there was a particular pump, GESI, an OTC pump, where the market cap just got absolutely insane. I think it was, I'm pretty sure it was like 2 or 3 billion. You can go check the tweet, but basically it had a higher market cap than some of the companies that we know and love, like Victoria's Secret, I think Dick's Sporting Goods, stuff like that, which have, I'm pretty sure, hundreds of millions, if not billions in revenue, and it had a higher market cap than them, and it had like 50,000 cash, no revenue, stuff like that. So when you see that as a short seller, it's like, oh my gosh, this is a complete scam. I got to get short no matter what at all costs. And then they keep the scam going, and before you know it, like in this case, I was down unrealized like close to $300,000 because I was so convicted on the fundamentals, but the technicals were just not aligning. And if I look back at the chart now, like you can go look, like last June, it was literally a picture perfect breakout, like a perfect breakout. Every technical was screaming at me to cut my short and get long, but I couldn't do it because I was so focused on the fundamentals. And I got lucky that time because it stopped after it went 100%. So I only drew down 100% on that position, and then it collapsed and I ended up covering for like a 95% profit. But they're not always going to do that. And I've learned that in subsequent trades since then, where you get too convicted and you end up getting screwed because of that. So I think it's just about balancing the fundamentals with the technicals and making sure that the technicals are aligning.
Mm-hmm. And what are some of the things that you look for in terms of an entry and figuring out when you are most comfortable in terms of getting the timing right on some of these scams?
The biggest thing for me in entries is just making sure that the price action is doing what I want it to do before I get in. I guess kind of waiting for confirmation in terms of what I have seen on previous scams where they start working. And again, that's something like, if I see those stair steps, I know that it's doing that. Or if I see a daily chart just floating up day after day after day, I know it's aligning in terms of that. But for me, the entry itself is not insanely important on most of my biggest trades, just because I am just so right on the thesis that I could pretty much enter anywhere and it would just keep going in that direction. And that's why I like these scams. So the entry itself is not insanely important, because once I have an entry and I'm positive on the entry with smaller size, I'll just keep scaling into a winner. And the more that it goes, the bigger size I have. So I guess I'm a little different in my entries than most people in terms of that, at least on this particular setup. If there's other setups, like say a breakout, I want to make sure that I'm buying into the support as it's floating up before it actually breaks out, stuff like that. So I have a good average and I'm not faked out. If it goes over the breakout level, then dips back under for a second. But on the scams, I really don't care that much. It's just about adding to a winner and being really patient once you have the entry.
On that note, do you often swing some of your positions? What percentage of intraday versus swing are you?
I think it just depends on the market. There's certain markets where I feel like there's more opportunities to swing stuff, and there's certain markets where there's more opportunity for intraday trades. If I'm shorting stuff, almost always I prefer to be out by the end of the day if it's a listed stock, unless I'm up like 60-70% already on my position and I'm confident it can go more. On OTC pumps, you got to trade those a little bit differently, and I typically swing those more, but you got to be really careful on your entry, because again, on something like GDSI, if you're early, you can be down 100%, 200% or more. So those I typically swing more, but I'm very careful to make sure that I'm green on my position if I'm swinging. And that's a rule that I typically have now. On the long side, I can be very patient on swings if I'm convinced that something is probably going to run at some point. but yeah, in terms of percentage, I can be very scalpy on some of my day trades. So I think a lot of those I am always taking if I see an opportunity on a day-to-day basis. So if I had to say, probably like maybe 10% swings, 90% intraday, or maybe 80-20. But some of those swing trades account for a large portion of my profits because, again, you add to win and you're really patient with it. So
Do you have a preference shorting a stock or going long, or is it just a matter of what the market gives you?
yeah, I mean, I love doing both. Honestly, I don't know that I have a great answer for that. I mean, the nice thing about going long is you have math in your favor. You're never going to be down more than 100% on your position, and you can make, as many percentages as you want. But short side, it's reverse of that. So, I mean, if I had to pick something, I guess I would say going long. But there's few greater feelings in shorting a complete scam and seeing it collapse the second you get in. So
I wanted to talk a little bit about your trade management. How do you approach trade management and making sure that your losses don't overshadow your winners?
that's something that I didn't used to take very seriously because I just kind of figured, if there's good opportunities and I'm trading well enough on those good opportunities, even if I take some big losses, it will be more than made up for by the big winners. But I had a brutal wake up call, as probably most of the people watching this video have seen, when I drew down 850 grand in 50 minutes on ILAG. And that kind of slapped me in the face and told me, yo, you're not going to make this as a career if you don't focus on risk management. And since that point, I have added a daily max loss, as Nate recommends. And I've actually dropped that figure since I first put it in because I realized, what I had it at before still was just too much wiggle room, because most trades that work, actually pretty much all the good trades that work for me, I'm never down a bunch on them. So there's really no need to give myself that much wiggle room. So after I had that drawdown, I had a 40K max stop that I put in. And then I believe it was, I don't know if it was January or it might've been February. I think it was February this year. I took that 40K loss on BBBY the day where, you had the nice squeeze out, it comes back in, and there's the one day where it just goes insane. And that day, for whatever reason, I just got really stubborn and kept taking attempts on it, and ended up losing 40 grand. So after that, I dropped it down to 20 grand for my max stop. And since then, I don't think I've hit it. So it's been really good to get that risk under control. And the reason for that is I went and looked at the numbers for 2022, and I realized that I gave back pretty much half my year on just 3 mistakes, which if I had had a max stop, I would have completely avoided. And so I think that is just the number one thing, is having a max stop. But there's also certain situations where that max stop is not going to save you because it doesn't apply. So on OTC stocks, I could be wrong on this, but I'm almost positive that the max stop doesn't work on OTC stocks. And I'm also almost positive that it doesn't work in after hours. And so between those two things, like, those are situations where you could still easily get caught if you're being stubborn and you're only relying on the broker level max stop to save you. So I think an important thing for me is just having a number where, I think Nate actually talks about this, like your oh shit number, where it's like, I need to get out of this right now because something is not going right. And I have that number now. And for me, that number is 20K. But I start to feel off about a trade if I'm down, 5-10K on it. And at that point, I just kind of pull the plug, because it's not worth risking your year's profits just because you're being stubborn and trying to fight back out of one trade. And if you can avoid those big losses, the smaller gains really, really add up. And so this year I've done a much, much better job about that. And I think the last thing for me is just knowing what you want to do under certain situations. So where I got into trouble on ILAG was where it was up halting, and it didn't give me, any time to think about, should I be getting out here or whatever. And I just completely froze. And so I put in a rule after that if I am ever stuck over high a day in an up halt, like, say previous high a day was $10 and it just up halted at 10.20, I'm getting out on resumption 100% of my position every time if it's gapping up above it. And that has really saved me this year already several times on stuff where, like, I'm I'm in too big. I get stuck in an up all over high day. I'm like, damn it, I got to stop out now. And then I stop out and it goes another 50% higher and I lose 10K and it would have been, 30, 40K. And so I think that rule has been super helpful for me, but obviously it just depends on your personality and knowing where you tend to take the biggest losses. But I think that was where I took my biggest loss. And so I implemented that, and focusing on the risk management has just really helped me take my trading to the next level.
And if you're looking to take your trading to the next level, Investors Underground might offer exactly what you need to help break through. You'll have access to mentors and courses to learn from, some of the best technology available for scanning and breaking news so you can stay up to date with the market. And you'll have access to the chat rooms, where you'll find a vibrant community of focused, like-minded traders posting their trade ideas in real time daily. You'll also have access to the midweek study sessions, webinars, and all the other resources available to IU members. Listeners of the Investors Underground podcast can access special deals over at investorsunderground.com/YouTube. And now, back to our interview. Can you talk about the importance of traders continuing to adapt and make changes so that they don't make the same sort of mistakes, twice or three times, which could wipe them out entirely?
Sure. I think the ability to continually adapt is something that is an absolute must as a trader, because the market environment changes and what's working now will not be working the same way a couple of years from now, because if it's working, people are going to start doing it and more people are going to do it and they make money at it. And then it becomes too crowded and then the opposite thing starts working. And so in terms of risk management, you have to just always make sure that you're figuring out what those potential liabilities are if your setup becomes too crowded, and make sure that you're putting yourself in the position where you're not going to get screwed if you're sized on that setup. And that's something a lot of people struggle to recognize. And even myself, because Nate was talking about it for a while on those China liquidation plays where they were getting more and more crowded. And he's like, one of these is just going to get away. And I heard him say that, but I couldn't get rid of the conviction on that setup. And I pretty much went all in right at the bottom. And so that's how I ended up taking a loss like that, because I was just ignoring the signs that, the market was changing and I wasn't able to adapt. And so after that, I've really tried to notice when the market is shifting in terms of any of my setups and just play based off of that. If you see that every single gapper is just fading perfectly and, a bunch of shorts are making money on that, you can know that, all right, soon one of these plays is going to be really annoying and it's going to trap a lot of shorts, because if it worked the last 10 times, they're probably sizing up a lot on this one. Just things like that. So that's what I've been trying to do to make sure that I don't get caught off guard by a sudden shift in the market.
For traders who are listening that might be struggling either with consistency or who have taken a big loss, what advice would you give them in terms of being able to get back in and do better moving forward?
That is something that is really tough, to be honest, because I think the biggest thing is not even the financial impact that a big loss has on you. It's the psychological impact of being scared to trust your gut when you get a bunch of conviction, being scared to, when you get a great setup, put money on the line, because, you can't stomach another loss like that again. And I think the only thing that helps with that is just sizing back down for a long time and proving to yourself that you do have an edge and you do have what it takes. And eventually you can scale back up. But I mean, I really don't know how Nate did it after.
I know he had talked about a big loss with Kodak.
Yeah, Kodak. Yeah. And then he talked about, like, I don't know, 2 days later or something, he was still firing on all the cylinders. He made back like half of that. I don't know how he does that, man. I mean, I am officially over the I-lag pit at this point, but I'm still not at all-time highs, because I took pretty much the same size loss on HKD like a month or two before that. And so I'm almost over those highs, but I mean, it's been pretty much like a year and I'm still digging out of that hole because of that mistake that I made. But I think the biggest thing that's helped me is not trying to make it all back in one day. Making sure that I'm sticking to my process and I'm focusing on letting winners run and adding to winners and really being tight with my risk on the losers. because when you do that, even with small size, the gains really add up. I mean, I've had so many trades this year where I risk $1,000, $2,000 and I make 10K, 20K, 50K, 80K with 2K initial risk. And those are the type of trades where, you can dig out of a hole, even if it's enormous, if you just keep taking those types of trades and don't let yourself take big losses. And I think probably a lot of people get into a revenge cycle where they see they're down a lot and they are just incapable of sizing down because they know that if they size down, it's going to take them a long time to get back there. And so a lot of people with small initial risk might only make a small amount of profit. But I think that's another thing that can really help take people's trading to the next level, where just because you're only risking $500 or $1,000 on the initial position does not mean that you can only make $5,000 on it. Like, there are certain setups, if you can find them, where you can risk $1,000 and make 50 grand on them. If you're really patient with your entry and you add to a winner. And so I feel like that is the biggest thing that's helped me get out of the ILAG drawdown and almost, recover back to new highs.
Thank you. There's one thing that Nate does say, and I've heard him say for years, is that singles add up. And it sounds like that's sort of what you're describing is, if traders can put away this urge to revenge trade and try to make it all back, the singles, the risking 1,000 and maybe making 5 or 10,000 or even more that you're describing, could really add up and can help traders, dig out of that hole that they might have put themselves in.
Yep, exactly. And I see this with beginners a lot too, where, they come in and instead of paper trading or trading with $1 risk, like I recommend if you're a brand new trader, they trade, with the same risk that a professional trader would use. And before they know it, they're 50K in the hole, 100K in the hole. And now they're like, well, I got to keep using big size because I'm never going to get out of this hole if I size back down. And that's just a really dangerous mindset to have. So, I would just, again, recommend sizing down and adding to winners.
Absolutely. And on that note of mindset, I wanted to talk a little bit about the importance of mindset with you, because one of the things that really stands out to me about you is your psychology and your focus on success. So could you talk a little bit about, what you believe it takes to become successful in trading or entrepreneurship or anything really? How much focus and determination to succeed does one have to have?
I think you have to be really self-driven and you have to never accept no for an answer. And that's kind of ironic because I did accept no for an answer to a certain degree when I quit back in 2018. But I think I was just at the wrong position of my life. But at this point, I think being super disciplined is an absolute must in terms of being able to cut your losses and all that stuff. And just understanding that it's a really tough job. And that is why it gives the fruits that it does. Because if it were easy, literally everyone would be doing it and there would be no edge and we wouldn't be able to do this. So you have to set yourself apart from the crowd and do stuff that the average person is not willing to do. And that can be in any regard to trading, whether that's tracking data and, spending hours and hours on spreadsheets every day to find your edge, or whether that's reviewing charts and going through hundreds or thousands of previous examples of stuff, or studying old videos and watching hundreds of hours of videos that nobody else is watching because they have, 50 views on YouTube, but that's where the best information is. All those things are things that the average person is not doing. And I feel like if you have the drive and honestly the love for trading, that's what really sets you apart. And it's one of those things where if it feels like work, it's hard to force yourself to do stuff like that. But I feel like if you actually have a passion for it, it's a lot easier to succeed because your mindset's in the right place and it doesn't feel like work. So, instead of binge watching the latest Netflix show Friday night at, midnight, you're watching trading videos. And that type of stuff is what sets you apart. So I feel like that's one of the biggest thing that my mindset has that sets me apart from the average trader, because I love this stuff and I'm always reviewing videos. I mean, right now I'm going back and watching like all of the podcasts you've done, all of the Twist podcast with Jack and Kyle and all them. And there's just so much good free information on YouTube that people aren't taking advantage of.
That's interesting because as a successful trader, you're still taking the time to keep your mind open and bring new ideas in and test things and confirm, what could be edge in the market. I think that's noteworthy, is that even successful traders are continuing to put in the work. And as you mentioned, it's because they have a passion for it.
Yep, exactly.
And for the traders who found success quickly, maybe in 2020 or maybe even in the current market, what advice would you give them in order to help keep their profits rather than give them right back to the market?
It's pretty similar to my previous answer. I think it's making sure that you have a love for it, but more importantly, always being hungry, never being satisfied with what you have. And there's a balance there, obviously, because if you're never satisfied with what you have, you're not happy and you're not fulfilled. So there's really a balance there. But I think it's recognizing the success that you've had and being grateful for that, and being happy with your life, but at the same time always striving for more. Because when you get complacent in trading, that's when you lose your edge, and someone who's working harder than you comes in and takes that edge, and before you know it, you're not profitable anymore. So if you randomly had success in 2020 or 2021 or 2022, you got to keep working to keep that success, at least until you've been trading for a decade plus, and that what you're doing is not going anywhere.
How do you think traders should think about success? At what point do you think they should be able to tell themselves, okay, I've succeeded as a trader?
I think that point differs for everyone. I think success is just a subjective metric that really depends on the person who is defining it, but probably comes down to freedom. That's the main thing. When you have the ability to live your life the way that you want to live it, I would say that's success. And that's really why most of us trade, I think, whether it's freedom with your time or financial freedom to be able to buy things that you want, or buy your loved ones things that they want or need. To me, that is where success comes in. But that number can differ for everyone. Someone who is making $250 a day at their 9 to 5 would think that $1,000 a day is absolute success. But if Short Bear starts making $1,000 a day, that would be a pretty big failure for him. So it really just depends on what your goals are in life and how much you want to achieve. But I don't think there's any issue with classifying what you've had as success, even if it might be less than what someone else has had. But I think there's nothing wrong with always striving for more, as long as you're happy with where you are, it's kind of like a counterintuitive thing. And it's something that I still struggle with, because if you always want to be better as a trader, like, it can be difficult sometimes to feel happy with your current performance. Like I have this talk with my wife all the time where, like, I have an okay day or a decent day. I made 10 grand or something, but I'm really hard on myself because I'm like, I messed this part of the trade up. And she's like, well, you got to take a step back and look at how far you've come. And that's something that I personally don't do very often. And so it's also good to have that balance where you're striving for more, but at the same time, you're appreciative of everything that you've accomplished.
Is there anything that you do away from your trading desk, that doesn't involve looking at charts, that you believe contributes to your success as a trader?
I think discipline is one of those things where you either have it in all areas of your life or you don't have it in any area of your life. And I noticed that when I took the big loss on ILAG, I had completely let my discipline slip in literally all areas of my life. I had pretty much stopped going to the gym for the most part. I wasn't taking care of my body in terms of stretching, and just so many other things, like eating right, even the type of showers that I take. If I take a hot shower, it's because I'm feeling lazy and I just want to, have a nice little cozy blanket there. But if I take a cold shower, it's because I want to get amped up for my day. And just those little things where I am making the decision to make the hard choice that will make my life better in the long run. And that really, really has a huge impact for me. So the biggest thing probably is in terms of fitness, like in the gym. And I know there's avidity and all those things. And that really, really makes a big difference for me. I've talked about this a few times, but I'm doing burpees right now as punishment for a huge bag hold that I had on an OTC stock, where I basically invested in a complete, I don't want to say complete scam, but most OTC stocks are not great companies and they're on the OTC market for a reason. I put way too much money and believed the story of this OTC stock. And by the time all was said and done, I probably lost like over 200 grand on it. But this final cut, I lost $89,300. And my friend Tim Sykes, he assigned me 89,300 burpees. And so I've literally been doing 250 burpees every single day. And I have not missed a day this entire year. I'm up to like 43,500 burpees. And that is one of those things where it's just like a zero compromise, zero exceptions policy, where no matter what, I am doing this. Like, I don't care if I'm taking a trip and I get in from the airport at 1 a.m. and I have to get up at 6 a.m. the next, I'm doing my freaking burpees. And it's the same type of thing, because when you have that no exceptions attitude, when it comes to cutting losses, it's just so much easier, because it's like, I'm cutting this loss, no exceptions. I'm doing my burpees, no exceptions. I'm going to stretch every night because I sit in a chair for 6 hours, 8 hours a day. And if I don't stretch, my body's going to be killing me. So I stretch every day, no exceptions. And that no exceptions policy in the other areas of my life has had such a big impact on my trading this year. So
that's incredible. And you're holding yourself accountable, which I think is really important for traders. And you had also mentioned, you're working with someone assigned to you the burpees. How important do you think it is to have a network of traders who you can talk to about trading and give one another, really maybe critical feedback, but find ways to improve yourself through your network?
I think that is one of the most important things for finding success in trading, is making sure you have a really good network. Lance Brightstein refers to it as the pod. But I think, man, I mean, it's just so important, because you can bounce ideas off of each other, developing new strategies. It's also a good metric. Like, if you're in a trade and everyone is insanely biased towards one thing, it might be a good sign that, like, okay, maybe I should reconsider a little bit, because if all of my friends are short all in, maybe all the other good traders are short all in too. And if everyone's on the same side of the trade, maybe that's not such a good thing. And obviously you can reverse psychology that to infinity, because if a lot of good traders are in a trade, it's probably because it's a good trade. But I think that is a super important thing. And another important thing is being able to pick each other up when we're having tough times, because in the market, there's so many times that you might feel like your edge is completely gone, and it's just because there was a shift in the market. And having your friends there proving that, look, there's still setups out there that you can make money on. You just have to continue to adapt. That's been really helpful for me, because it's easy to get boxed into a certain setup and feel like, okay, the setup's not here, it's not working. Can I even still make it as a trader anymore? But then you look over there and see Jack, or you see Kyle, or you see, all these other people who I talk to on a daily basis, and they're killing it on random setups you might have never heard of. And you're like, oh, I guess, I could still do this. And so all of those things combined, it makes it vitally important to your success as a trader to have that network.
David, if it's okay with you, I would love to go through a lightning round set of questions, quick answers.
Absolutely.
So my first question is, what is the best piece of trading advice that you've ever been given or ever heard?
It's got to be Tim Sykes' cut losses quickly, man. It's got to be the number one thing. I strayed away from that, and it made me realize how important it really is.
What's one trading milestone that you've been able to accomplish?
The biggest milestone for me was just under a year ago, where I just had, it was like a reverse black swan. It was where everything just absolutely came together. The perfect setup, amazing liquidity. I took all the sides that I wanted. I got in perfectly right at the top on this short, and I covered absolutely dead bottom. And that is the only trade in my career where I can say I feel like I perfectly capitalized on the opportunity, and it was an incredible feeling. And the P&L reflected it. So it was awesome.
What would you say is your greatest strength as a trader?
Probably ability to learn from my mistakes.
And is there any area of your trading that you would like to improve on?
I want to be better about day trading large caps. It's something I would love to be better at.
For those listening who would love to learn more about you, or maybe even contact you, how can they do so?
I have my YouTube channel. I have Twitter. Learning about me, probably best places on my YouTube channel and Twitter. But if you want to DM me, you can DM me on Twitter or DM me on Instagram. All of my ats are the same. The Laptop Legend. So.
Great. Well, David, thank you so much for taking the time to chat with me today. We got to go through a lot. I think it'll be really beneficial for a lot of the traders out there. So thank you so much.
My pleasure, man. Thanks for having me on.
We hope you enjoyed this interview on the Investors Underground podcast. We have more great interviews that we believe you might also like. So don't forget to subscribe. You'll be notified of upcoming releases the moment they become available. Thanks for watching.